Hey everybody, happy Thursday? Yes, happy Thursday. Back to the final hour. It is 3 p.m. Eastern Time, December 5th. We are live. Had some trades closed up today. Let me chat about those. I posted this in Telegram. 9 for 9 this week on double up alerts. And that was an update because I closed out another trade. We got a nice little streak going on daily profit play, 48 for 52 winners, 4 for 4 this week. We're 31 for 31 with waterfall income. And yeah, that's not a bad thing. So we will have some trades that expire tomorrow. If the SPY hits 605 or 610, I should have some decent winners there. I'm going after anywhere between like 150 to 200% return on capital. If the Qs make their way down to 520, that is another level that I'm watching for a nice gain. I'm looking at AMD to possibly stretch up towards 145. That might be a tall order for tomorrow, but we're certainly going to find out. So let's see what we can do with that. We're trading around 141 right now. Still have a decent level that I'm watching at 145, but we're going to have to see some positive traction out of the old non-farm payroll news tomorrow to get the markets going. Read an interesting stat today. We saw higher highs this week on the, let's go all. Saw higher highs this week on the S&P. I believe this is number 56 for the year. Number 56 for the year on the S&P. The only potential issue is that higher highs, while the advanced decline is actually showing more stocks are making lower lows. So again, we're kind of getting to that very narrow lack of market breadth. And again, that's not a bad thing, but it just means that at some point it turns over. There could be a bit of a reality check that happens. But I talked about this a lot yesterday. Not calling the top. We still have the Fed in a couple weeks. We have 6 rate decisions coming next week and the week after. So there's a lot to digest. Earnings wise, we had some notables today. Let me get through some of these charts. So there, get rid of some of these screenshots that I posted earlier. Okay. And what, dude? All right. I thought I had an earnings thing for this week. Fudge. I was trying to think who has earnings this week. I guess I can go to old StockTwits. Let's go earnings. So for today, some notables: Lululemon, DocuSign. These are after the bell. Let me see what reported before. I know we had Dollar General today. Build-A-Bear Workshop. There's Dollar General right there. Brown-Forman A and B. It's a little Jack Daniels action. Let me check in there. I haven't seen their stock in a while. Brown-Forman. Decent little pop in earnings. I used to have some investments in this one. It's been a hot minute, but yeah, down to the COVID lows again. Interesting. So let's say we have a look at old BFB. Brown-Forman. Earnings forecast to grow 3.2%. That's certainly not too great. Snowflake analysis wise checks a lot of boxes. Dividend not well covered. Debt not well covered. We've got to be looking at some positive flows in the spirit space. Undervalued, man, that's probably, it's not really an attractive dividend, so probably going to stay out of that one. I'm just curious because I owned it back in the early 2000s. We've had some splits and repricing along the way, but from 09 to 2020, that's a pretty good run, 700 to 800% gain. But we're back to COVID lows. So is it attractive enough to justify a position? I've seen better. So I'll let that one slide for right now. Markets for today, overall pretty flat. Here's the S&P. SPY, virtually nowhere on the day. A lot of chop. 606.81 lows intraday and 608.49. We're looking at a range of around 0.26%. Point-wise in the S&P, again, very quiet day. You're looking at a move of about 16 points. Wow, that is crazy. Market maker moves had it around 13 points today. They're not too far off. So things are quite quiet. I'm going to still extend this line just in case there's any type of structure breakdown and see if we take out any recent lows. But we are now 1, 2, 3 weeks bullish. We have non-farm payroll tomorrow. Monday, Tuesday, not much happened. Gap higher on Wednesday. Wednesday, end of day close, flushed a little higher. And Thursday, just pretty steady, but another high once again. So we'll see if Friday is another poke to the upside or if Friday is a retreat. Maybe it's an indecision candle for the week. But for the most part, things are pretty slow. Only about a 61-point move, where the average move is about 140 points. So less than half the expected weekly average, and that's what it is. NASDAQ has come back in a pretty good way. We have 1, 2, 3 weeks bullish as well. Pretty decent gap from Tuesday to Wednesday, and percentage-wise, up around 2.6% on the week. We'll see if that is sustained or if we fade. I'm looking again to see if the Qs hit this 520 level. I suppose I can set a chart alarm at 524 to see if we get to new all-time highs. So we'll have a look at that. If anybody would like to join me, I've got a webinar at 4 p.m. I'll post my Telegram link and my Discord link. If you join my Telegram, we should have a live link posted. If you want to join me at 4 p.m., I'm going to be talking about this service right here, Double Up Alerts, which we came out swinging with a Monday launch and already 9 for 9 with some nice gains. Average gain, I think this week, let me check the official numbers here. So I'll rattle off some percentages. These are all return on risk. So 86, 214, 79, 106. That's after 4 trades. 59, 70, 28. That is 5, 6, 7 trades, 9 trades total. So add this all up, divide by 9. You're looking at an average return on risk about 71.3%. Not too shabby. Win percentage so far, 84%. And I mean, 84% including some live trades that I've taken before I launched the service. And those were losses on my end. But, so far for the student side, if you took all the trades with me this week, we're 9 for 9, which is obviously pretty exciting. So, but anyway, I'll post the link for Telegram. If you want to jump in, there'll be a 4 p.m. webinar link if you'd like to join me. And that will do it for my Thursday. And then Friday, non-farm payroll. I'll be live in the morning around opening bell. And then I'll be live with A1 Trading just after 10 a.m. And I'll wrap up. I'm not sure if I'm doing another webinar tomorrow. I'll wrap it up with my final hour session on Friday. So let's see here. Let's see what the old advanced decline line's doing today. So we have about 57.2% of stocks declining today. We have this is interesting. I mean, the 50 and the 200 moving averages, we still have about 62.5% of stocks above the 50 period. We have 67% above the 200 period. So that still does spell out a little bit of a bull market. You can see the mixed results today in the live heat map. United Healthcare down. There was some breaking news on that where I think it was the United Health Group CEO was killed. So there's ongoing investigations there. We're seeing the semiconductor space down on the day. I'm showing CRM down. Looks like Tesla's had a pretty nice run. Walmart hit some all-time highs. Amazon's up as well. So Meta is flat. Google is flat. I guess we'll just zoom in and check it out. So here we go. Let's see here. Tesla up 4%. It's carving out some fresh highs. 220, almost 221 on Amazon. Apple flat, but still hanging up above 243. Here's my semiconductor equipment in red. Here's my semiconductor space, the tech in red. NVIDIA was a nice win this week. That was 106% return on capital. Not too shabby. AMD is out to this Friday. We're going to see if we get to 145. Q's, SPY, Ford is out to next week. So we'll see how that plays for this Friday and next Friday. Just going down the top-down watch list, Russell down in the day by 0.87%. I would be interested. Let me go to the daily time frame here. I'm still interested in some support on the Russell. To what level? Probably the 50 or 100 moving average. If I'm going to start establishing some additional positions on the Russell. Yeah, I like this kind of area 1. If we hit the 200 moving average, area 2, and look to see if we just continue to kind of wave around, making higher lows and higher highs, or if we come back a little bit steeper, maybe some sideways movement in here, which we have seen many times before. I mean, this was very sideways on the Russell. This is very sideways and volatile on the Russell. So if I can scoop up some bottoms and play some options, that's probably one index I'll be considering trading a little bit more aggressively if we get some dips and pullbacks. The Dow, same thing. I just need to see some pullbacks. We've stretched a decent amount away. Current price around 9.3. Oh, that actually didn't do that very well. Let me go here. We stretched away about 9.98%, almost 10% away from the 200 moving average. Last time this thing tested was well over 200 bars. Again, not a crazy extreme. 275 bars it's not nothing. Like, that's a decent bar count. The S&P has the same type of thing. Here's the S&P stretched away about 274 bars. So the Dow, the Dow and the S&P both, percentage-wise, away from the 200 moving average is a decent amount. I would say I talked about this yesterday, either in a live session or in my 3 p.m. session, which was also live. But I'd mentioned if we do melt up a little bit higher, getting up to like 615 or 620, I had mentioned if we're around 15% overextended, meaning if I measure the top of price all the way down to the 200 moving average, if that is a 15% move, I'm going to start looking at maybe implementing some hedge trades. That's all. So I'm going to keep a close eye on that. And this week, I have 2 levels that I'm trading around, 605 and 610. Either one of those going into Friday's trading could offer some really nice profit. So I'll do my best to see if I can manage a bigger winner there. And then let's talk Telegram here. If you want to join my Telegram, there is my 4 p.m. webinar if you'd like to join. So I'll just go ahead and post that link right here. Here's Telegram. So in the chat, Chris Pulver trading Telegram. So there's Telegram. If you'd like to join my Discord, here is an invite for my Discord. Chris Pulver trading Discord. And there you go. A couple links and some free chats. All right. Yeah, I'll keep an eye on the Russell. I don't mind that. IWX, still watching this one as well. This one is, a third or a fourth of the price. I guess a third of the price of the IWM. This is the Russell Top 200 value. It'd be nice if there was like a Russell Top 200 growth. Russell Top. There is. IWY. I'm going to put that in my watch list here. So let me add IWY and slide this up the watch list. There we go, IWY. So I've got my top 200 value, top 200 growth, and you can see the difference in performance, right? IWX has been pulling back. IWY has been up to fresh all-time highs. Same type of thing. If I get some dips and pullbacks, right now we are overstretched around 12.5%. We go back to this July and August correction. Market was overstretched around 16.5%. So doesn't make me necessarily bearish. It just makes me cautious moving forward where, I do think that there is a, 5 to 10% risk in the market right now. It's just a little bit of a cleanse, could be a little bit of a purge. I'm not sure what the market would require, from news and headlines in order to get that type of, um, pullback, but it can happen, you know. So I don't know, but I like the IWY. Let me see what other Russell top. So I've got the top 200. I've got the top 200 growth, top 200 value. So IWL. Let me see what IWL looks like. Also at fresh all-time highs, but it is also more expensive than the IWY. Actually, it's a little bit cheaper, I suppose. All right. Anyway, I've got to trade options around these. IWY, probably not as liquid as the IWM, but we do have options. Not great options, though. That's unfortunate. $5 strikes. Yuck, man. I'm going to have to trade something at the money. So, all right, I'll be patient. Let's move on. Dollar index. Let's take a look at currency strength on the day. So we have euro and Swiss on top, New Zealand just off, dollar getting a little bit weaker today. Not a ton of volatility. 40 on the upside, 50 on the downside. Dollar taking a little bit of a hit. I am still watching for this. I had mentioned this earlier this morning. If the dollar index, this is DXY, if we close firmly below, okay, if we close firmly below this 200 moving average on the 4-hour time frame, then I would look for the dollar to continue to trend lower. But I would also be not surprised to see a head fake here. See a bit of a bear trap, see this market come and test the low, pull back into the same high, maybe have a little bit of a run back up to these range levels, and we just have this trend on the dollar, a little bit of sideways movement on the dollar, and we see where we go next. So if I'm going to be short the dollar, I want to see it break clearly below the 4-hour 200 moving average. Otherwise, if it's a bear trap, just be looking for a little bit of a snapback there. You could get long on confirmation, stop loss below, keep things a little bit tighter from that perspective. Oil at 68.51, watching the 67 handle, watching the 70 handle. There is crude oil futures. Natural gas, nothing right now, just going to hang out. Gold, still very indecisive. This is now 7 days or 8 days. We haven't had a lot of traction. Today's candle is a little bit more bearish than others, but still quiet. 1, 2, 3, 4, 5, 6, 7, 8 candles that are mostly indecisive. And I'm looking to see, in the near term, I'm sure there are some traders out there that are watching this very closely, watching with leverage, and looking to trade gold aggressively. And so maybe that aggressive trade is further to the downside. I don't mind seeing a correction like that. So a high, low, lower high, lower low. And if you're looking for a breakout, then we just need to see this kind of 8-day range break and go lower. So I like scooping up some longs between 2,500 and 2,400. I'm going to be willing to also add a little bit more to it, but I'll probably trade out 2025, 2026. I'll position for most of next year to be long. Here's silver. See if silver can hit this first measure move at 35.85. And my final target on silver would be staying long all the way into the 40s. I'd like to see if silver can get back to 48 to 48. Well, I guess $46 to $48 would be kind of a good enough price target, and then a nice round number move to 50 would be fantastic. Bitcoin, pretty decent rejection off of the 103,000 today. So we hit 103,668. Curious if there was some profit taking just on the day, which there could have been. That's understandable. I'm still going to hold long. But yeah, we tapped 100K, went up a couple $1,000. We'll see what this ultimately gives us price action wise. I'm still liking the buy the dip on Bitcoin if we pull back into, let's say we pull back below 100,000, which we're at 98.5 right now. We pull back to maybe 92. Pull back into, for this fib, for example, if today was nothing more than a noisy little fake out, we could still pull back to, let's say, 90,000. Let's even say 83,000. I mean, that's a good spot to look to get long. If we have a swing high, pull back into this area, and then look to get those highs again, I like that. I mean, it could be wishful thinking to see a $90,000 price point or a low 80s, like 82,000 price point, but I'd probably establish some type of option trade on it through IBIT. BITO was long, still long. I've got trades out to 2026 on this one. IBIT, some fresh highs in the day at 59, giving a little bit of pullback, and we're down. Bitcoin's down 0.32%, IBIT down 0.68%. MicroStrategy had a big old reversal, gapped all the way up towards 441, has pulled back 6%. That is about a $60 move on MicroStrategy, so continues to be highly volatile. Coinbase as well, gapped higher to 343, faded about $20 to $30. Ethereum hanging in there a little bit today, still has some previous highs to go after. I like the EETH ETF, trying to stay above $60 for full profit on some of the trades that I have. Japanese yen, Nikkei 225. I bought the EWJ this week. DAX has been crushing it to the upside. I'm not in this trade, but part of me wishes that I was. That was a really nice, just kind of accumulation zone in here. So we pulled back to the 21 and the 50. Actually, no, that's the 50 and the 100, I believe. Let me double check that. Is that the 21? I think that's the 21 and the 50. Yeah. Okay. So I have 21, 50, 100, 144, 200. Those are all my moving averages. FTSE green on the day. China flat. Overall, my China trades that I have tracked down here, green, but not a ton. JD and Baidu doing pretty well. JD is up 2.14% today. Baidu's up 1.63%. Futures market. Let's check some palladium. Check some platinum. Just waiting for lower levels. I would like to get some platinum futures if I can get back in this yellow box. Here is corn. Corn futures, again, looking to see if we head lower. Soybean futures, looking to see if we head lower. Wheat futures, looking to see if we head lower. So these are close. I mean, these would be some really good trades going into 2025. If we came back into these lows, we would be revisiting COVID lows. So that's why I'd be remotely interested in like a 6-month or 12-month futures contract or options trade around these futures contracts if they come back to an attractive price. Cocoa, wow, getting back up there. All right. Well, let me set a chart alarm here on Cocoa. If we get back to, let's say, 11,000, I'll go 11,450. 11,450. Potential sell high trade. So I could do a, bear put spread from, I could do a bear put spread from the top. 11,450. So I could do a bear put spread from the top. And yeah, that could be a pretty good trade. Let me see right now if a bear put spread, if I go /CC or CO. What? Can I not trade Cocoa here? Can't trade Cocoa. Killing me, Smalls. Well, I guess I can't trade it. Well, that sucks. Let me see if I can trade anything with Cocoa. Gas, corn, silver, treasury notes, dollar, British pound, euro, Mexican peso, Bitcoin, lean hogs, but no. I'm gonna ask. I'm gonna ask Tasty and see if I get a symbol for Cocoa. All right, FTGC. These are some commodity-based ETFs. I traded a lot of these in 2020. As you can see, that worked out pretty well. Now we've just been kind of basing in here. The dividend's not awesome. I mean, 3.21%. I do think that commodity prices, if we have some bargain levels, then I wouldn't mind scooping up some type of exposure here for some upside. But we'd have to have the the inflation narrative starting to resurface in a big way for these to really go higher. So we'll see. Same thing on DBC. Pulling back in this yellow zone would be where I'd be looking for big buying opportunities. We're just not there yet. J&K is my credit spread. This is junk bonds. So it's AAA versus BBB versus CCC. No outlier red movement or down movement. So credit spreads remain pretty darn tight. Initial jobless claims, continuing jobless claims. We saw a higher print this week. That was today. And then my China stocks there in the that are mostly green today. So currencies, any currencies you want me to review? Let's see here. DAX has never been more north of its 20 or 200. 20 or 200. That's a big difference. I would assume the 200, right? I would think that stretch away against the 200s. It's getting pretty extreme, right? We're about 9.4% beyond. The two things, right? So, this doesn't make me want to force a sell trade, by no means. But there's a couple things going for this, right? If you take a look at this as a wave count, if this is a wave 1, this is a wave 2, this could be a wave 3 that's just kind of wrapping up. So either this was wave 3 that we had a little bit of a pullback, and then this is wave 5 that's still going to continue to stretch, which that seems feasible. If this is 1, 2, 3, that little pause could be 4, and 5 is now capitulation. So we're getting into capitulation. Usually it doesn't happen a lot in wave 5. Wave 5 is typically like pretty slow. But anyway, just saying a couple things. If we stretch, like I said, I think we're 12% right now. Nope, not 9%. So, if you looked back historically, how far away, and it's not necessarily to the downside, okay? So if you look at the crash right here, it's probably well below 9%. The COVID crash is probably well below that. So it's not to the downside that I use this measurement, it's to the upside. When this COVID crash happened, we had a drop of about 35% below the 200 moving average. But when we have a healthy bull market, it's like, how long does the bull market last, and how far does it get away from the 200 moving average? So this bull market, we had about right there's about a 9 to 10% move before we pulled back. Right in here, same thing, about a 9 to 10% move before we pulled back. So it's getting there. This high that went into 2015, we had about a 15% move. So we were stretched above the 200 moving average by about 15%. So I do see we were higher than this, back in, looks like March or April of 2015. And where we are right now, we're starting to show kind of the same signs. If it's getting a little long in the tooth, there's still some more room to melt up higher. This time of year, if nothing's really going to disrupt it, then sure, I could see us getting up a little bit higher, right? I could see us going up a little bit higher, getting into, maybe the teens, 12, 13, 14%. Again, the only way I'd say I'm going to be bearish on the market is if we are so far stretched away, I just put in a defined risk debit spread. I would, buy a put, sell a put, have something that hopefully is cost effective where I can get maybe, 55 cents on the dollar, maybe 60 cents on the dollar. So if I paid, 30 to 35 cents on a debit, that would be a pretty good reward to risk. I did see something today. I was actually looking at just a bear put spread on the SPY. It's actually pretty cheap to take the trade on the SPY. Now, again, I'm not looking at the top as like, oh, we're gonna have a top. I'm just saying that it's pretty cheap to build this trade out. So I'll just show you right here on a risk graph. Let me float this out. Here's a good example. So if I were to, right now, price is trading around 606 and change. We'll just call it 607. If I were to buy the 605 put, which is about $1.70 out of the money, and I sold $5 against that, I can take this trade for $1.42, which gives me $3.58 potential profit. If I were to do the math on that trade, 358 divided by $1.42, that's a 252% return on risk. So it's actually cost effective to be trading the downside. I'm not saying that it's the right trade. I'm not saying it's the highest probability, but if and when we do get to a topping area, hopefully the price structure and the the pricing in the options market is this favorable where to buy essentially an at the money or a one strike out of the money debit spread, we're getting really good return on capital here. So I mean, if price was going lower and I had priced below 600 by expiration, I get max profit, and that would be a full $3.60. If it trades for $1.40, my risk would be if I'm dead wrong and price goes to infinity, then I lose. But I'm only losing $1.40 to $1.44. You know, so it's just an interesting window. I mean, the IV is really low right now. The daily point moves and the market maker expected moves are really low right now. So I do think there is that potential risk of the market correcting, snapping back, pulling back fast. We could have a little reaction and volatility, but I don't think we're just historically overbought. I know that we are also at, I think the price to earnings. Let me check here. Let me see if I think I took a screenshot here. 4%. Nope. 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 Son of a gun. Anyway, we are kind of historically high. Let me see if I can find it here on Twitter. Yeah, price to earnings ratio in the S&P has moved up to 26 with the multiple expansion of 17% in 2024. This is 32% higher than the average price to earnings ratio since 1989. So 35 years of trading, right? 34 years, yeah, 35 years of trading. We're above the historical average of 19.7. And let me see how crazy high this has become. I also think we've gone into a pretty extended expansion too. Let me move this over here. So operating earnings per share, percent change, percent change S&P price. I mean, 26 being, historically speaking, like there's not a lot of these that are past 26. So we've got 26 for this year. In 2023, which is a bull market, we stretched up to 22.3. 2022, which is a bear market, we were mostly down that year, right? So there's your price change in the S&P, 19.5, 22.9. 2020, which we obviously had a crash in 2020 for a month, we got all the way up to 30.7. 20.6, 2019 was a bull market, 2018 was a vol event, 2017 was a steady bull market, 2016 was a breakout year, finally after a 2-year range. We hung around that 20 to 21 average in 2015 to 2016 when the market was sideways. 2014, we had an oil crisis. Stocks were performing okay. That was, getting into that recovery. 2013 and 14 is when we started to breach all-time highs after the 2008 financial crisis and 2009's bottom. So, I mean, we had a pretty low price to earnings from the 2007 to 2014 window, historically pretty low S&P price to earnings. Then 2001, 2001, look at this stretch here, 1999, 1999 to 2001, that's a pretty big stretch. And 2001, as we got really overstretched, there was our, S&P performance not great. So again, does this mean anything? Well, it just means that if we get historically high valuations, more than likely the market's going to say we're kind of expensive, we're overpriced, and there's corrections that will likely take place. If we're sitting at a price to earnings of 26, then historically pulling back to 20 or 19 or 20 or 21, it's like that could require a correction. I mean, you see here that we've had contractions. We have mostly expansions. When you look at the probability, it's like there's a lot more green than red. Obviously, the market since 1989 has made a lot of all-time highs. So it's just trying to be a little bit more aware of the timing of the market correcting. That's really it. So we'll see. But there's all sorts of ways to potentially spin this and justify this. We're way more of a tech country now. Multinationals are very powerful. Market cap is larger in the U.S. than any other country by a landslide. I said this morning. The total market cap of the U.S. is 63% of the globe. That's crazy. So it just continues to gain. I mean, the U.S. has carried the world for the last couple of years. So does it mean they can't continue to carry it? No, you just wonder if there's going to be a bit of a recentering, or you get kind of that reversion where the U.S. has been outperforming, your emerging markets are way the heck down here. If the U.S. goes sideways, does that mean emerging markets start to catch up? If the U.S. corrects, does that mean emerging markets catch up? It would just be a bit of a diversification trade, looking to see if anything non-U.S. actually pays. So if I'm trading non-U.S., I mean, I don't mind Japan. If I'm trading non-U.S., I don't mind China. India had a good run this year. I know some of the commodity spaces. I mean, I'm long Brazil. I know Argentina's had a heck of a run this year. So there's some opportunities for it, but it's just a trade. Okay, S&P 500 is historically expensive, ranking top 1, 2, or 3 in price to earnings. Yep, I know it is. And it is, and historically also, it's been one of the best performing assets ever between the S&P and the Nasdaq. I mean, those are some of the best performing indexes ever, and we've had multiple years at 15% gains, 20% gains. This year, let's say this year we finish above 25%. If we are greater than 25% this year, that would be 3 times in history that we went back to back. 3 times in history, back to back, 25% gains on the year. That's crazy. And if you go back to since 2000, I want to say we've had quite a few. I guess since 2000, well, maybe not since 2000, maybe since like 2012, 13, we've had multiple, 15 to 20% years on just the index itself. So I like that as more. I keep telling traders, don't buy the needle, but buy the haystack. And if you're trading the SPY or trading the Qs, if you like owning shares, that's a pretty nice way to do it. I do wonder if we actually have a split at some point coming. We're trading at 607. Does the SPY get up to $1,000 and then split? If so, cool. Does the QQQ get up to $1,000 and then split? I mean, it's not going to happen overnight, but if it happens over the next 3 years or 5 years or 10 years, there's another, let's say, 40% upside in the S&P and another 100% upside in the Nasdaq. I think that's worth considering. If we're talking 5 years out and we can get some gains that line up to 100+%, I'd be silly not to take those trades. I'd be silly not to participate. But in doing so, I do want to be aware of some type of timing in the market. So when we're overstretched, I think we could correct. Is this overstretch where I'm calling the top? Absolutely not. Next week, if we have some big order flows and some institutional levels, I'll be watching. If they show to the downside, okay, fine. I'll trade it. So anyway, we'll see how it all plays out. All right. Anything else? Otherwise, I think I'm going to wrap up just a couple minutes early with the pending webinar at 4 p.m. If you're in my Telegram, that link has gone out. So if you go to my Chris Pulver Telegram, there it is right there. So you can pop in, see the history. And there's my link, prosperitypub.com/surge. You can come in and join me with a 4 p.m. webinar. Just going to be me. I'm not sure if I have an MC for it. I might have Raleigh White on with me, which would be fine. And we'll tag team some Q&A at the end. But looking forward to a fun session. So, all righty. Harry, I appreciate your comments that were this morning. I just thought I'm just going to delete those comments. Nothing against Ferrari Greg, but he did ask me questions. I did answer questions. He proceeded to still buy the service and then was asking for refunds. I told him exactly how I traded. Anyway, it is what it is. So I just don't think he needed to put it on blast. in Discord. But so I just thought, hey man, you got your refund. I'm not doing anything that's upsetting traders. It's like I've got services and I'm trying to help traders. It's that simple. You could have done some homework and asked me more questions. I would have answered. I mean, he asked how I traded futures. I said I trade a lot of futures with options. So what's the service? Futures with options. What did he want? Not options. So I was even willing to give him my options course just to say, look, man, if you want to trade options, here's the easy way to do it. Nope, it's not what I'm looking for. Okay. So anyway, problem solved. All right. Any other questions for today? Otherwise, just a little post here on Discord. I share this in Telegram as well. Waterfall income service 31 for 31 since we launched a couple months ago. Daily profit play 48 out of 52 in the last month or so. Double up alerts, which is brand new this week for 9 for 9. We have a couple more trades lined up to close up tomorrow. We'll see how those go. And into next week, I think I have a total of like 11 or 12 positions running. We'll obviously have some more opportunities coming in week to week. So I'm having a lot of fun with these services. They're doing really, really well, and that is the point. Obviously, I'm not launching a service that I'm not going to be looking to make some profits on. That's the whole point of trading. So there we go. All right. Okay. I'm going to go live at 4 p.m. for another webinar on the double up alerts liquidity levels. And I'll be back tomorrow morning. Daily profit play. We'll kick things off in the morning. We do have non-farm payroll at 8:30 a.m. Eastern time. We'll see if there's a gap up or down. Like I said, I'm watching the SPY 605 and 610. I've got two levels, and I'm looking to see if either one of those is hit. Can I turn in? I'd like to see something over 100%. So 125, 150% would be great. 200% would be awesome. Both of those trades line up for upwards of, I think one of them offers up like 9 to 1, and the other one offers up about 6 to 1. And that's wishful thinking if I'm going to hold it out to the close, which I probably won't. So I'm looking at roughly a 3 to 1 reward to risk on either one. And then the Qs, we get down to 520. I'll watch that for tomorrow as well. And that'll do it for today. So, all right, everybody. Thanks a lot for being with me. If you would kindly hit the thumbs up button, that goes a long way for the participation when you're live, asking questions, typing things in the chat, hitting that thumbs up button. That is good for the YouTube algorithm and supporting the channel. Speaking of channel, where are we at right now? We're seeing some just steady, subtle gains in the channel each and every day. Right now, sitting just shy of 8.3 thousand subscribers, and we'll keep doing the thing we do and doing the good work, and hopefully we'll see 10,000 followers here at some point, and we'll go from there. So first was to get to 5, now 5 to 10, 10 to 20. And we'll see if this just organically grows over the next maybe 12 months or so. But I'll keep pushing out a bunch of content. If you like what you see, again, I appreciate the likes and subscribes and the comments. And also, if you want to check out my playlist, I've got lots of playlists in here for trading. So my Keep It Seriously Simple. I have, stalled on a couple of these. I had one rolling, every couple of weeks on the Trader's Path to 100. This was before I migrated brokers and I had some disruptions. I mean, I had to migrate a bunch of ACAT transfers from Schwab with their migration into Thinkorswim. Thinkorswim is fine. I don't mind the platform, but I've got an advisor account, like an advisor account with Tasty Trade. That's just way easier for me to manage everybody's account. So now it's all with Tasty Trade. I still have a couple of Schwab accounts that are IRAs for passive management. I do have a Thinkorswim account, which is a Schwab account, but I'm using the Thinkorswim web and a Thinkorswim desktop. I also have a Webull account and a Robinhood account, and that's it. So anyway, if you're looking at some of these, bonus education things, or my, the playlist that I have here is like weekly trending topics, live sessions, trading 101 video series. This is one that I'd like to get back into. I'd like to get back into the trading indicators. It just takes a little bit of work to find the indicator. And honestly, I don't really trade with indicators. And so it's more of like, if I did a playlist like this, there's hundreds of indicators, and that's cool for content. But it's like, if I've never used it, I can't sit here and put a video around it and say like, this is an awesome indicator. I use this. It's like, I don't, what do I like? Price action. What do I use? Some moving averages that reflect price action that give me some dynamic support resistance. That's about it. What do I trade in the markets when it comes to Forex trading, when it comes to futures trading? I trade structure. I trade efficiencies, right? I trade liquidity levels. But with the way that I trade, equities and options, it's really simple. I mean, you can do so much good work in the equities market or ETFs just looking at like a 50 moving average versus a 100 moving average versus a 200 moving average. I mean, if that's all you did for 5 years, 10 years, 20 years, you buy the dips and let the thing rip. There's tons of money to be made. So that's why I stalled on that one. But my trading 101, probably one of my better ones as far as just timeless education. There's 71 videos in that one. So, good videos on support resistance and price patterns, a lot of Forex videos and structure. The Keep It Seriously Simple video series, there's 43 videos there. So between Trading 101 and Keep It Seriously Simple, there's lots of education to keep you going. Also in my Discord, I've got all my services listed under education updates, and my Vimeo page, I have my full courses for practical options and the quick guide for quick options. So the quick options is $27. The full course is $497. They cover 6 strategies, 13 strategies, full PDF. So anybody that makes those purchases, you can hit me up in Discord. I'm happy to send a PDF your way. So I just want to see a proof of purchase from you, and yeah. But those are available as well. If you're ever interested in those are in my Discord. But here's an example. I'll just go to the page. So vimeo.com/on-demand/quick options. You can see. So you can buy the whole thing for $27. You can stream this anytime. I don't allow downloads on it, but you can stream it anytime you want. There is around 2 hours of content, and it covers the entire strategy guide, covers buying calls, buying puts, bullish spreads, that's debits and credit spreads, and covers bearish spreads, debits and credit spreads. The full course, take this last little bit and go to practical options. That's the full course. There's 11 videos, a 72-page PDF, and 13 strategies. Also, I go through options chains, key terms, and trading options. The risk graph, understanding what that looks like with all these crazy, what does this red line mean? What does this green line mean? What about, unlimited risk versus defined risk? All these things I cover in a lot of detail with the full course. Then I cover the strategies. I throw in also calendar spreads, butterfly spreads, and also risk-defined neutral trades. The strangle is undefined risk. The iron condor is defined risk, but those are directionally neutral positions. So you've got bullish, bearish, and neutral all covered with my full practical options course. So if interested, check it out. Watch the trailer, whatever you want. I'm here to help. Okay. All right. Papa John, if you're a VIP member, it's in your class, dude. I know you and I have had some private messages, but it's in your class. So your Prosperity Pub one-click trading portal, if you're a VIP member, those practical options courses are in the class. You have access to that. So that's how you can watch it. Okay. Let me know if you see that. You should see that. If you log into one-click trading, you should have you'll see the practical options content. If not, let me know. I can get you to support, make sure, that they've got you. But if you're a VIP member, it's there for you. Okay, sounds good. I've got 9 minutes to prep. Webinar at 4 p.m. and have a good rest of the day. I'll see you tomorrow. Thanks. Bye.